let's kick off with Old Mutual, which was founded in 1845. There's the history that Lance was talking about, and this was in Cape Town. It's now a global long-term savings insurance and investment group.
It is in the process of a major reorganisation under new CEO Bruce Hemphill. It has a market cap of 166 billion rand, a price-to-earnings ratio of 20.52, and a dividend yield of 3%.
Share price, we're going to start with that. It'll give us the context that we want for this discussion. Lance, you've got it up on screen there. Talk to me about where we're going on Old Mutual.
Yeah, this is really a breakup play. This is almost a corporate action, and you've got to say, can they extract value out of this? Of course, Brexit hit Old Mutual particularly hard, and it's a case for quite a few South African companies where it was really unexpected. But before that even happened, there was this decision to reverse course, as I spoke of earlier, and say it hasn't really worked building this financial services global conglomerate almost. And they've taken it region specific. Of course, anchor shareholder in Nedbank, which is also in there. So Bruce Hemphill came in with a very clear mandate: break this up, extract value. 50 million pounds, something like, cost savings in head office in the UK, in London, which seems incredible number, but that in itself is there for the taking. So you see it, all 4 units.
You've got to imagine what they were doing in the head office if they can make that kind of saving.
Exactly. It's almost incontemplatable. In rands, it really is a lot of money. So there is value to be unlocked. But you have to look at it by each region. So the US asset management business separately listed on its way. Nedbank, you've got ABSA as almost as a proxy for this. But Old Mutual are saying we've got a much clearer strategy. We'll most probably unbundle it to the stake of about 25% for our shareholders. So that's that pot. South Africa, called the emerging market assets, packing that. Peter Moyo taking charge of that. So quite a clear strategy. But how much value there is to be unlocked is the uncertainty.
So build it up, and now break it down. And you've got to say, what about capital misallocation in the build-up phase if you can't actually unlock the value now in the breakdown phase?
And they certainly want to keep that relationship with Nedbank, because I think that's the only place where there are really any synergies left. I mean, you go onto the homepage of their investor relations website, and the first thing is their strategy of the breakup with a big picture of Bruce's face there. And when you read through it,
and I believe Rolf Mupita's face is still there.
Well, his face isn't there, but he's still mentioned as one of the key members of the breakup.
And of course, he has moved off to MTN. He was CEO of emerging markets.
You do get the feeling from reading through that they expected this to happen a lot faster than what it has. You know, this is all 2015, 2016 talk, and you get the feeling that they expected it to be done by the end of last year, and clearly we haven't seen as much progress as what they would be expecting.
Well, note to Old Mutual, perhaps just an update to your investor relations website. Rolf Peter may be worth taking off that page. Lance, sorry, I woke up in a bad mood this morning. What can I say?
No, you're spot on.
So let's see, from an investment perspective, do we buy this one or don't we? Can we make money? That's really the bottom line here.
I'm skeptical. I think it's played out. It's become messy. It's been protracted. It's quite long. I think it might even be a little bit longer than they expect, 2018. So I'm cold on this one.
You're not hot. You're not hot. Not hot? Are you hot or not?
You know, the market knows there's going to be a breakup. They know. They've looked at the details and the potential value unlock. It's priced in. If it takes longer than expected, there's only potential downside. So I'm also
not hot.